But here's the reality: is that is if the euro is still inside of these 50% retracement shorts from highs, and let's go look at the euro here really quickly. We're completing a profit target, and yes, we're breaking our lows of the trading day, but we haven't broken the lows of the week. And we look at the traditional that the euro is in, and then what I'm going to do here is I'm going to just pull the GC chart up, and where is gold? Gold has made many new lows of the week in the process of this sell-off and going into extensions. So the little bit of wiggle that the dollar correlation might have here in terms of a dollar strength trade that affects both gold and the euro, it still exists as long as they're still inside of their traditional shorts together. And the gold negative correlation is negative 0.84 over the 15-day, and the euro negative correlation is negative 0.98. And they could change places. Gold could go -9 and the euro could go negative 0.89. And what would that mean? It wouldn't really mean anything unless they broke their structures. And so I think that you could make a case, moving forward here, that the dollar string trade wouldn't have as big of an effect on the precious metals if the extensions were to break. And it should be noted that we're going into an environment here when we're zooming out on the daily chart to gold. We're dipping right into our lows of the year down here. And how do we confirm that that's a support level? We can't until we break an extension, because look at the traditional short setups that we were running into as we were coming out of the middle of April. They have targets down at the 37, 39s. I mean, there's a whole other $250 an ounce that we could slide into and have a violent kind of capitulation bottom. And I think it's important to understand the mechanics behind this. The group of individuals who own their gold, know why they own their gold, and are happy they own their gold, are protecting those positions. And what happens when we come into a 3,700, which is an extension long from the 2011 highs to highs extension? What happens when silver dips deeply into it's a half off sale right now? That group of individuals who have created an optionality for themselves to buy more of that metal. And that's why, many times in these very, very deep sell-offs, as you're coming out of them, you see some of your most aggressive stand for deliveries. And you don't see the stand for deliveries as we're falling down into them. But as you're coming out of these holes, you do see the market participants standing for delivery inside of the COMEX. And that's what I suspect that we're going to see. We're going to see an extension failure, and then we'll start to see pullbacks defend. And will the dollar still be strengthening in that environment? We'll see. But if we don't go straight down in extensions here, we could make a case. We're going to make a case that we would predict, we would front run and make a hypothesis that the dollar correlations would change. This stream continues at emoneyaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.